Year 2023 has come to an end, and gold in the year 2023 has achieved the all-time high levels, the record high levels at 2148. Now, in the year 2024, can we expect gold to continue this bullish momentum? Can we expect gold to move further highs towards 2300, or there is a possibility for it to retrace again towards the bottom of the channel? What is going to be our strategy trading gold for the year 2024 and also for the month of January? And in detail, we will also look for the first week of January. If you are new to the channel, do subscribe to the channel to get the latest update. I do share twice a day updates on gold, first with the Asia session, next with the US session. Let's start. First, we'll look into charts and indicators, and towards the end, I will give you the trading levels and strategy. Let's start with the monthly charts first. See, on the monthly charts, one observation here is, first of, if you look at the monthly charts, see, this was the consolidation zone, then the acceleration started here, and gold has scaled towards the highs at 2000 plus levels. Since then, we have observed that gold was trading sideways. It has achieved the bottom at 1600, and just connect the dots, rise, retracement to the bottom, and now again scaling on the upside. Now, first wave, second leg, and the third leg is continuing here. If you also observe the monthly charts, you will find the drop, the rise, almost the triple top, then the retracement, higher lows, and now it is looking upwards. Now, where are the highs? You can notice this is the bullish channel in which gold is trading. The highs of this channel are above 2200 levels, and if you look at the distance between of this 1 year, the highs are located in between $2200 to $2400 level, and the lows of this channel are located in between 1900 to 2050 levels. So first thing is, yes, it is still looking bullish, it is still looking upwards, and it can continue with the upward movement for the first 2 months of the next year. Yes, we can expect a bullish momentum. Now, if see higher lows and higher highs, and if you look at the last candle, first of all, three observations here. One, extremely bullish candle. Second, moderate bullish candle. And the third is a swing candle. Now, the swing candle suggests that the prices refrain to stay bullish and have closed with a very small body. Now, this suggests that bullishness has certainly diminished, and in the coming month, that is in January, if you see the prices staying below 1970 levels here, we can expect that coming couple of months can act bearish. Now, where the gold might turn bearish in 2024, what should be our expectation? Now, see, this 1800 levels have become a wall for gold. If and only if any point of time gold is seen trading below 1800, we can say that it has turned bearish, and then we will look forward to the bottom, triple bottom levels here at 1620, 1650 zone. But is it possible for gold to move towards this? We will see with the help of indicators here. Now, another observation here is, look at the median of the Bollinger Bands and the 20 period moving average. The 20 months average is right now sitting close to 1900 levels. The median of the Bollinger Bands at 1870 and the support at 1840. Now, as we have seen, this is the zone where we are going to see maximum support for gold here. This is also the bottom of the channel, and hence in the next couple of months, if the prices are seen trading below 1970, we can expect it to move towards close to 1900, 1870 levels, but it is still not to be treated bearish. If you also look at the Bollinger Bands, it is expanding here. This is certainly a bullish sign, but at the same time, one must look at the divergence of the price from the moving average. Too much of divergence always calls for it to converge, but remember, this divergence has just started. So my expectation that first it may try to scale to the highs, wait for the moving average to climb up, and then retrace. So yes, higher highs, the highs in gold are still possible. We can expect it to move towards 2200, 2400 zone. Only worry point is the divergence of the price, but if you look at the moving average, it has started to look upwards, and hence it can continue with the upward momentum for next couple of months. That is my expectation. Now look at the stochastic. This is entering into overbought zone. The MACD, I have shared this several times in my analysis. Look at the MACD. This one complete wave is done. Next observation is right now this is under retracement. The slope here and here are different. Here it is a slight gradual rise. Yes, it has started to diverge. I will still say it is gradual. But remember, it has still scope for it to continue with the rise for a little while from here, and hence gold can continue with the upward momentum. RSI rising. Look at the volumes. The volumes here have started to increase. When these are bearish candle, the volumes have diminished, while on the buy side the volumes have certainly increased. Good signs for the bull. Now look at the weekly charts here. The retracement, the rise, the retracement, and then the rise here. Yes, it is still falling shy of the top of the channel, somewhere here at around 2200 plus levels. Now look at the last week of this year and this month. You can find out the prices fail to stay bullish. Yes, it has opened the week on a bullish note. The bullishness certainly getting diminished, very small body here. Thus, it is probable that after the drop, retracement, and in the coming week, we can see a probable retracement. How low it can drop? Now just connect the dots here, you will find the bottom of this is somewhere here at 2000 levels. 2000 levels is going to remain the key. We have to wait. Prices might consolidate here at 2000, and only if first 1970 1940 zone, if it breaks past by, you can treat this as a bearish move, and then after that we may look forward to the prices below 1900. Yes, this calls for prices to retrace a little. In the next week, if you see the price is staying below 2050, you can sell. Expect it to move towards 20, 30, 20, 20, and then 2000 levels. These are the support levels here. But if you look at the movement, see, this was the flag formation, and since then we have seen this breakout. Now if you just connect the lows and the highs, you will find that it is still continuing in this bullish channel, and 2030 2020 zone is what we should look forward to on the downside. On the up, again 2200 plus levels. Now just trace the momentum here, just trace the momentum and the movement highs, then we can see it gradually moving towards, see, it can try to stay here for a while around this zone. If it continues to stay on the elevated levels, then hit the bottom, and then likewise we can expect gold to continue in this bullish channel for a while from here. If you notice, it is just come out of this bearish channel and restarted its journey on the upside, and hence we can still expect price to remain elevated. Now second observation here is the Bollinger Band on the weekly charts have started to expand, certainly a bullish sign. The median and the 20 period moving average are sitting at 1950-1980 zone. That is why I say this is going to remain a greater support, and the 50 period moving average at around 1940. So this complete zone is going to remain a greater support for the gold in the coming week. And if you notice, the crossover has happened here. It tried to converge. See, despite having such a great bearish momentum, the moving averages have just converged and not crossed over, and now have started to diverge, certainly a bullish sign. Prices are little divergent from the price and hence moving average, and hence we can expect prices to converge a little before looking forward to an up move, and that is why I say this is going to remain a greater support zone here. Now look at the stochastic. This is dropped and now trying to recover, and notice the momentum rise, overbought levels, retracement, and now looking upwards, it can take it on the overbought zone. Look at the MACD. Now look at MACD, drop, retracement, first wave is done, and notice the delta here, higher highs are achieved, then higher lows, and it is now looking upwards. Can we expect it to move towards the highs of this channel, which means the highs in gold are yet to be achieved and are still awaited. RSI rising, volumes are increasing here. Throughout the year 2023, we have seen And in fact, since 2022, we have seen the volumes diminishing, but last few weeks here of 2023, we have seen the rise in volumes. That's a good sign. Coming to the daily, on the daily charts, just one observation: gap bit at 1835, 1845 zone. That is the only gap which gold might try to fill some point of time, possibly in 2024 also, but maybe in the later half. If you look at the daily charts, you will also find the moving averages are now looking upwards. And on the daily charts, another observation here is higher highs are done, higher lows. See the bullishness, this is a reversal sign. If the prices drops below this zone at 2050, 2040, you can say that more bears will take over, and then we can see the prices retracing towards 2020, 2030 zone. This is what we have seen on the weekly charts as well, and hence for the coming week we have to be cautious and watchful. Prices might try to retrace a little, but it is not a reversal. And as long as in the coming few weeks, if you see the prices at around 1980, 2000, in fact, these levels are going to remain a great support, and at these levels also we can initiate a buying position. Now look at the daily charts as well. See, moving averages have crossed over and are looking upwards. It can try to push the prices on the upside. In the coming few weeks, we may see gold staying here at around 2200, 2300 levels. Look at the stochastic. This is seen the top here trying to look downwards. The MACD, another point is on MACD. See, double top, price is retraced here. Now trading with divergence. Now remember, this crossover has come at a certainly elevated levels. After the drop, it is retraced. Now, if you look at, this is a sharper drop and this is a retracement. Now it is trying to converge, and a crossover here can bring the bearishness, which can take the prices little down, and we can see gold hitting towards the bottom. RSI looking down here, but not completely bearish, and the volumes have certainly diminished. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels, and specifically for the next week and the month of January. In the long run, if I summarize, that summary also I will give you. But before that, if you want to learn this art of trading, you can join my 28th mentorship batch starting second week January 2024. Yes, with the help of tools, techniques and strategy, you can identify profitable trades and trade profitably. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can find the details on my free Telegram channel and on my platform www.forexfunda.com. This platform has much more to offer besides the mentorship batch, the news, the economic calendar, the community, everything is there. You can also consult with me by just booking a call, and you can also be part of my webinar series where every Sunday we discuss what to expect from the markets in the coming week. We take a holistic view of indices, commodities, currencies, and the volatility, and I give you deeper insights. Yes, this webinar series also comes with an opportunity for you to interact with me or consult with me twice in a month. Do register for it. Visit the platform forexfunda.com, and you can also be part of my signals channel on Telegram. Reach out to me via Telegram or email. First, for the coming week and for the month of January, where to buy. And before I give you the buying levels and selling levels for the week, what I expect from gold in 2024 is to achieve the record high levels. Yes, it can try to move towards 2200, 2400 zone for once, any point of time in the coming year. Possibly this might happen in the next couple of months or the first quarter. Yes, we can expect gold to achieve record high levels in the first couple of months or first quarter. The second quarter may possibly see a sideways or sluggish momentum, and in H2 onwards, there could be slight bearishness where the prices might again try to come back to the levels here at around 2000 or 2100. Thus, it can be concluded that gold has still bullishness intact. It is going to achieve record high levels, and possibly toward the second half of the year, we can see prices again coming back to the normal levels. Now, with that, for the month of January, what to expect? And for the next week, now, first let's talk about the levels to buy. You can buy here at 2071 levels. Beyond that, one can look forward to 2082, 2089. Now, these two levels and this zone is going to remain a critical zone. Beyond this, you can expect that we are looking forward to 2120 levels and then 2150 levels. If the prices moves above 2150 any point of time in the month of January, you can expect that 2200 is a certain. Any drop after achieving 2150 will certainly take it towards 2200 levels when it starts to retrace again. Thus, buy the dip will be the call if it breaks beyond 2150 any point of time in January. Beyond this is also possible, but the rise is going to be limited. We are going to look forward to 2138, 2238, 2267 and then 2289. Again, we are going to have a massive rise above 2200 levels. This is completely applicable for the month of January. In fact, these levels will hold good for the next few months. In fact, beyond this, 2400 is also possible, though it appears these levels are laughable as of now. But these are markets, and I expect a little bullishness before it looks over to any drop. On the downside, now as we have seen on the daily charts, that next week possibly there could be slight bearishness. One can take a sell entry at 2255. 2255 is a good sell entry, but then 2248. Let me come out of the 22 levels and let's become normal. 2055 is a good sell entry, and then 2048 is the first support levels. Below this, you can expect 2041. Now see, on the downside, the supports are going to remain stronger here. 2029, and then below 2029 is where slight bearishness can be seen, where 2018, 2014 levels to come hold good and act as a stronger support. Now below this is where little more bearishness will be seen. 2004, 1995, 1980 and then 1972.5. Now remember, as long as gold stays above this and this zone, it is going to be treated as bullish. In fact, I will say 1950 and 40 levels. As long as gold prices stays above this in the month of January, do not treat gold as bearish. It still has a possibility for it to continue with the bullish momentum. Only below 1950-40 is where further bearishness can be seen. Now remember, dollar has also hit a lower levels in the month of December. Thus, dollar prices also might try to pull a little back up, and thus a little bearishness for first couple of weeks or maybe in the first week of January cannot be denied. But still, in the long run, there is still higher highs are to be achieved, and possibly gold in the long run can erase some of the gains towards the second half of the year. Thus, those who want to buy gold, the January dip can be a good opportunity for you to buy and accumulate for next 2 to 3 months. Take your positions accordingly. Like, share, subscribe and comment. Join my mentorship batch, Signals channel, webinar series and my platform forexfunder.com. Thank you very much. Have a great profitable trading week, trading month, and a very happy and prosperous new year to you all. Thank you very much. See you again with the daily updates. Thank you.